Nothing in this program should be considered investment advice. It is for educational purposes only. Please hit pause and read this disclaimer in full.
I'd just say to Scott Bessent, dude, be careful here. You could really go down in history if you're not careful. Watch yourself. But he's not going to watch himself. He's going to probably make some crazy comment later on today and try and take over the markets.
Hello, everyone, and welcome to this episode of Finance U. I am your host, Chris Martinson. I'm very excited to have back with me today macroeconomist, investment professional, author of The Collapse of Global Liberalism, host of the Multipolarity podcast, Philip Pilkington. Philip, so good to have you back. I've been really looking forward to this.
Yeah, the last time was great, so I have been too.
Yeah, I know. We received an outreach that maybe we should debate each other on Mario, and you and I agreed that it wouldn't really be a debate, probably. not a spicy one, not like the one you had with George Gammon. That was a good debate,
and I'm thinking I'm going to debate Jeff Curry because he thinks there's no weaknesses in the private sector. He agrees with us on 80%, but he thinks the private sector is robust. I don't think he understands the private equity shadow banking and stuff like that. So that'll be an interesting discussion if we can get it going. Jeff's a very smart guy.
That's interesting. I mean, Jeff's more known to me as a commodities guy, and obviously very smart, seasoned professional. But has he really looked at the CapEx contribution of AI and all of that in our economy?
I want to get him on, and I'd love to hear the counter argument. I'm very interested to hear it because, as you say, he is a very smart guy. So I'd like to. We'll see. I texted the producer today and said, "Hey, I saw Jeff. We should do that. I'd love to see what the point of difference is there. Maybe he's not aware of it. Maybe, as you say, he's mainly commodities based, and he doesn't know, equity analysis or something. It could be."
Well, I will tell you this based on my travel. I was out in Phoenix last week, and there's no demand destruction out there. Every seat was full. Planes are taking off and landing every day. Prices are not yet conducive to demand destruction, and all of the other data says that we are starting to rip and strip through all of our inventories of things like jet fuel and diesel and such and such. So what are you noticing there?
I saw there was some flights grounded in the U.S. Due to shortages this week.
Out of Buffalo, a couple.
Buffalo, yeah. I'm wondering if that's the beginning of a trend. The other thing I heard through the grapevine is a friend of mine does kind of geopolitical consulting. I don't really know what else to call it. And sometimes you'll get requests in that for commercial things. And he was getting requests from a European client for diesel from Central Asia. And he's never heard that before in his life. I don't think there's any diesel in Kazakhstan either, but I thought that was really interesting. I've known the guy for years, and he's never said anything like that to me. It's usually stuff that's in the headlines, rare earth metal, aluminum, bauxite, these kind of things. If people are scrambling around asking geopolitical guys to get diesel, it sounds pretty bad, right?
Well, Russia has pretty much halted all exports of refined products to Europe. Which was they were a major supplier, and also now Europe's going to be competing with Russia for the same loads of diesel. So this is a very awkward development there.
Did you see Norway? Norway is telling them to go hang on the energy. Did you see that?
No. What are they telling them?
Norway came out today and basically said, we've been supplying Europe with a bunch of clean energy. I think that's just a cop-out or whatever to make it sound like they're great or whatever. But, we're supplying you with lots of energy, and we think that there's going to be issues, and Norway's out for Norway #1. So Europe, just be put on call. And I tweeted, I think the Europeans are going to start to tear themselves up over our energy supplies. Usually Europeans tear themselves up when they have to contribute to the unitary EU budget because they love the little EU flag, and they love going to the council and feeling important, and they love being bossed around by von der Leyen because of psycho issues or something. But when it comes to usually it's the budget that tears them up. It's I'm not giving €1 more, and it's okay, but wait until you see them fight over barrels of diesel. I think that's going to be a pretty fun fight. I think there'll have to be a cage match for that one in the EU Council. So I say it with some glee. I mean, I live in Europe. It's terrible, but these guys really have done it to themselves, and they've been getting away with it for too long.
Well, yeah, pretty self-inflicted gunshot wounds to the feet by Germany, in particular, really, really awful what they've done to their energy system, and by extension, their entire industrial economy. Did Germany know that they're actually an export nation when they set about destroying their energy infrastructure? Did they not factor that in?
I don't know what happened with Germany. I mean, like, it was taken over by like idiots, obviously. I think the Green Party is if I were to go and dig into how Germany destroyed itself, I'd probably be looking at the Green Party. The Green Party in Germany is not just like a small Green Party that you have in a normal country. Usually the Green Party is like 5, 6, 7% of the vote, and they can get into coalition. I remember the Green Party got into a coalition once upon a time in Ireland. But the German Green Party has this enormous amount of support, and my sense is it's kind of liberal German housewives who like have that German guilt thing from World War II, and they channel it into green because, like, it's the morality of a secular age or something like that. And I mean, that's step one, and then of course the Russia thing, which has actually, let's just call a spade a spade, it's stirred up something a bit dark in the German soul. Actually, there is an aspect of German culture that's very hostile toward Russia because it's dualist in that way. There's also a part of the German soul that really likes Russia, and so it's kind of like inside Germans are two, spirits, and when this one comes out, it gets a bit creepy, actually. And I think that's kind of happened too. So I think those two things fed in for the Germans to destroy themselves. But the Germans aren't averse to destroying themselves, number one. They've done it a couple of times. And the second thing to comment on is Germany's a very young country. People forget that. It was only really united under Bismarck in the late 19th century. There's a question if Germany's even a coherent country. I mean, it has a language and everything like that, but it's so young. I mean, it's so young. It's just a bit older than Ireland, and Ireland's a like historic island as a unitary ethnic group who were always kind of like one thing. It's kind of weird to think like Germany's actually only 140 years old or something like that, and it's been split in half for a decent portion of that history, right? It hasn't been a unitary country. So anyway, just my thoughts, but it's along those lines that whatever happened in Germany, but it's too late now, and Merz is a particular breed, so
yes, he is.
Yeah, I think tough, Merkel's trying to make a comeback, and as much as I don't like Merkel, I mean, she'd be an upgrade from the current status quo, I think.
Yeah, Merz is particularly awful in that role, and he's risking a lot too by supplying weapons to Ukraine and really sort of pushing and poking.
Do you know Merz's background?
Mm-mm.
Yeah, Merz is another one of these kind of American Europeans that have taken power. He was deeply involved with, I think he was on the board of BlackRock, a private equity guy. Not one of the, I always say private equity can be used for good or ill, and it's mainly used for ill these days, but the structure is neutral. But Merz is an asset stripper, like that's his background, and he wrote a little book in German, which is basically about like why we should strip the assets of Germany. And of course, if you know anything about what's been going on in Europe since the 90s, there has been strong attempts by the Americans to take German industry and so on, especially since the inception of the euro. And I do wonder if Merz isn't one of these vulture candidates. One came in Hungary too. It's the current foreign minister. She used to work for an LNG lobbying firm. And of course, if you know anything about Hungary, it's where the Druzhba pipeline comes in. Druzhba means friendship in Russian. And the US have always been after that Druzhba pipeline because it's the most embedded. It was actually created to make those countries dependent on Moscow during the Soviet period. It was like, stitched them into the energy infrastructure, and then we won't need another rolling in of the tanks like in 1956 in Budapest. So it's very integrated into the energy system. And they parachuted in Anita Orban. Her timing was so wrong though, because there's no LNG to sell. But no, she was an LNG salesman. She wrote her book. It was her PhD thesis, turned it into a book called Russian Energy Imperialism. So there's a bunch of these people who've been floating around, usually adjacent to American corporations, and they've come into powerful positions in this generation in Europe, and they seem just very destructive, actually. And I don't think it was a good strategy on the part of the Americans either. But that's a different story. I mean, I don't know if you even call it a strategy. It was interest groups, Anita Orban, for example, seems to have had some connection to the Bush family and to Halliburton and so on. So I think it was more corporate interest that sponsored these people. But
Yep.
Mertz is in the BlackRock camp, and of course BlackRock has a lot of interest in Ukraine. So if you start putting the pieces together, you start realizing some of what happened in Europe.
Asset stripping. Interesting. So I'm not sure these people know how the world works the way I do, or maybe I have it wrong. But my view of the world, Philip, is that you get energy, raw energy, at a good price, and then you turn it into higher value things, so sand becomes chips eventually or whatever. And Germany had a lot of energy intensive businesses, right? Making, specialty borosilicate glass manufacturers, cement, steel, you name it. All of those are non-competitive at world prices, given they're at the back end of LNG pipeline now. So guess what? Their major industries, energy intensive, are in a capital D depression. They're down 28% from their peak a few years ago. That's horrifying. Does Mertz really think you can just go in and asset strip a country and then you just rebuild it? This is just an LBO and we're just going to flip a few things and it gets better. He doesn't seem to understand if you break a country at its base level, it's over, right? We call places like this coal mining towns in West Virginia. Once the coal mine petered out, that was the end of that town.
Mertz strikes me. I don't know Mertz, but I've read a lot about him, and I've read a bit of his book. And my sense is Mertz is a stupid person. He's not a smart guy. He's one of those people who, if you've ever met them, they've become fixated on one idea and they blame absolutely everything on that one cause. So he became fixated on the fact that the Americans were much more efficient, their company structures were much more efficient than European company structures, and that's everything down to work days and blah, 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 blah. And he's become completely fixated on that. And so my guess is if you went to Mertz and, highlighted the fact that Germany's deindustrializing due to the energy issue, he'd say, no, it's due to the lack of efficiency. And you go, what's your evidence for that? And he hasn't looked at any evidence since 1998 or something like that, I think he's one of those guys, and I think that's why they put him. He was on the board of 12 companies or something like that. Crazy. I mean, completely. And he wasn't particularly liked in the party. He was an enemy of Merkel, famously. And I don't think a particularly impressive politician. I think these people are kind of picked up by corporates, and the corporates see an opportunity there. They see an opportunity to get something out of it. And, the stars have aligned in such a way that somebody like that may not be able to do that much damage normally. Maybe they just get, a buyout of a German company, something like that, by an American company or something. But the stars have aligned to put someone like that in charge and, burn the house down. You see the kind of lack of self-awareness and stupidity when you see him come out and defend himself. He says in public, I don't know why the German people have rejected me, because his numbers are incredibly low. They're like Keir Starmer level low now. And he gets mad about it in public. He says, why are they like this? Can you imagine a person like that, nobody, hey, everyone hates you and you're terrible at your job, and they blame everybody. I think that's who Mertz is, and I think they're gonna get rid of him soon. But I think the damage has already been done.
Markets are facing heightened uncertainty, and thoughtful portfolio management has never been more important. If your current strategy relies solely on passive investing or diversification without active oversight, it may be time to consider a different approach. At Peak Financial Investing, we connect you with experienced wealth managers who actively manage portfolios using disciplined, research-driven strategies designed to adapt to evolving market conditions. Our focus is on helping clients navigate volatility with clarity and confidence. While no investment strategy can guarantee results or eliminate risk, we believe that preparation and active management can make a meaningful difference over time. Visit peakfinancialinvesting.com to schedule a complimentary consultation and explore whether our approach aligns with your goals. I'm Dr. Chris Martenson, and I am proud to support Peak Financial Investing. This is not a guarantee of future performance, but a call to take your financial planning seriously. Again, that's financialinvesting.com. Investing, of course, involves risk, including the potential loss of principal. Past performance is not indicative of future results. Please consult with a qualified advisor before making investment decisions. So what happens with Europe then? So Norway is saying, hey, we're going to withhold some of this clean energy for ourselves. I assume they're talking about all the hydropower they get out of their fjords, but maybe they have something else in mind. But they also supply
a good about gas.
Gas, good chunk of gas too.
You can categorize gas as clean, right? So maybe that's the rhetorical trick they're playing. Yeah.
Mm-hmm. All right. Well, that'll be interesting because Europe has a history of being calm and then not being so calm as a continent.
I've been thinking about that a lot. I think the European populations are so beaten down at this point that they'll just take it. At least for a while. Well, in saying that, the Germans were so beaten down that they just took it in the 1920s for a while. So, yeah.
Famously. All right, well, let's turn to perhaps another not as smart as he thinks he is kind of guy. Scott Bessent's been doing a lot lately, and there's so much to discuss. We had the intervention a couple weeks ago. Then last week, he started doing some, expanded the $2 billion buyback program to a $4 billion buyback program where they're buying these off-the-run bonds. I have some data on that, which is kind of fun. Let me see if I can pull that up because, yeah. So this is fun. This is the most recent auction where it went off at $2 billion. There was almost $20 billion subscribed or offered. So only took $2 billion. And fascinating. So here they took just 2 CUSIPs off the table, or 3, I guess. This one at 52 cents on the dollar. So, Philip, that was a 30-year bond trading at 1.87. Ouch, right? 52 cents on the dollar. This one went off at 56. This one at 71. So I'm glad to see they're not buying them at par and doing a stealth bailout of banks behind the scenes. But somebody's now going to have to realize these losses. I think yet that we know of.
No, sorry. I just have to say it.
Yeah, but there they are. So obviously there's very poor markets for that paper. And so I think the Treasury was trying to provide some liquidity out there in this dead space of the market. But wow, ouch, 52 cents on the dollar is somebody's eating it there. Who do you think that is?
I think that this is the beginning of the end of the whole thing. I think we're watching what we talked about last time. Yeah. I think this is it. I think this is the big one. The yen intervention to me was the beginning of it. And since then, look, it accelerated way quicker. I remember I went on, I think, Nofal's show or something after the yen intervention. And they said, what do you think? Will it work? And I said, it could work for 2 weeks, maybe 4 weeks. But it's not, long term, the structural forces are going to play out. It's the carry trade, basically. It's the interest rate differential. And it lasted a day. And then I was like, okay, all right. Whoa, they've completely lost control over that. And then I was like, okay, I guess the next thing we're watching is the yen. And then boom, Scott Bessent's out doing really strange Operation Twist, which used to be done by the Fed back in the early 60s. He's doing it at the Treasury. And I was like, because not only does that signal that they're desperate about the bond market, it also means that the Fed have told them where to shove it. They've gone to the Fed and said, guys, come on, we know you're trying to target interest rates, but we're the country's going broke here and nobody's buying the bonds. And the Fed clearly said, sorry, not in our mandate. Because otherwise the Fed would be, just signaling lower interest rates. And it might actually work, well, debatable. But it might work. So the Treasury is trying to find all these things. I mean, we saw today, we said we wouldn't comment too much on the Bessent thing because we don't know and it'll render everything irrelevant if we comment on it.
But the economic D-Day, we don't know.
Yeah, we don't know, and so there's no point speculating. But there was a source that highlighted that the Treasury had something like 985 billion cash on hand, and it could use this for bond purchases. So that's at least the direction that they're thinking in. So they're thinking basically of doing a form of financial repression that was advocated for by the kind of modern monetary theorist crowd back in the day. And their basic argument is, and I know this is where Bessent's getting it from because he's aware of the MMT arguments. I know that factually. And basically the argument there is, so the U.S. Treasury market is an enormous market, right? It's probably the largest market in terms of overall liquidity in the world. And so if you go in and you make a couple of billion in purchases, you're hoping that that just signals to private investors and then they pile on behind you. The MMT argument has always been, sure, but you print the cash, so you could just technically buy up the entire bond market. Like, just, you can't. And Japan kind of did a version of that, although it was a little bit more complicated. They also stuffed the pension funds. They're regretting that now. Maybe they should have just cash purchased that stuff, to be honest, rather than stuffing the pension funds. But that's the kind of idea. And even the stuffing of the pension funds, it was using state money, in effect, to stuff the turkey. There's actually nothing wrong with that argument. I mean, if you have an infinite amount of purchasing power, you could just technically go out. The Federal Reserve now, I'm talking about, not the Treasury, but the Federal Reserve could go out and just buy every single Treasury in the entire market, right? And drive down interest rates that way, or, some variation, buy 50% of them or 60%. The Treasury only has about $1 trillion in firepower, according to the numbers that this source has leaked. But that's a lot of money. That's a lot more than $2 billion. And my sense is they're moving in this direction. Nick, is it doable? Yeah, I can't see any logical argument against it, but the dollars, like the level of trust, this is like, if you tried something like this after 2008 when we had deflation, and QE was a form of this in a sense, just a slightly less extreme one, because it was just trying to push the rates lower. It wasn't trying to get control over a runaway rate, But, in principle, it's sort of the same, but it's such a different set of circumstances. And I think, I don't want to put words in even the MMT people's mouth, some of them are quite extreme on it, but I think the more sensible ones would probably say, yeah, that recommendation was for an environment of very low rates. That was for an environment where you were trying to get the economy out of a depression. That was, I mean, if you do it in an environment of rising inflation and rising rates, you're going to have, your inflation will probably get worse, and all the pressure will go from the bond market onto the currency. And that's exactly what's going to happen. I mean, that's why gold is rallying. That's why even Bitcoin has now become a risk-off asset, apparently. It's become sort of a safe haven. Like, I'm interested to watch that. Has Bitcoin changed its status, finally, from being a risk-on asset to being some sort of flight to safety? We'll see. But definitely gold is, and probably silver, too. So I think it's pretty widely discussed now that the debasement trade is back on. But I think this will be a very different type of debasement. I call it the toilet paper trade. I think it's going to be a lot more extreme than the debasement trade, because all the markets are buzzing with like stuff that you and I talk about. That was not the case back in the initial debasement trade. People are actually talking about these issues. Like the Financial Times ran an article, I think on Friday, which basically like laid out the argument that Japan was part of the US dollar system and all this, interconnection stuff. I did the interview on it. It went kind of viral on NoFile, but they put that out, and I was like, I've never seen a major financial publication talk about that kind of stuff. That was for like doomers and all that,
I know the Financial Times. So that just pulled one from this weekend. And so they wrote here, so now no fewer than 3 times in 3 weeks, Bessent has given the message to investors to please stop selling his bonds, but they're selling his bonds anyway, taking borrowing costs to extraordinary heights in the same week. Again, amazing. It's in the Financial Times. Worse, investors are now selling the currency too. The dollar took a sizable hit after the buyback announcement, from which it has not yet recovered. And as well, the opening paragraph from this was amazing. Scott Bessent's running battle with the bond market is starting to look like his boss's war in Iran. Started by his own hand with a tangled set of objectives, an underestimated opponent, and an implausible path to victory. And like the conflict in the Middle East, we're all going to suffer its effects. Kind of interesting words from the FT, don't you think?
is starting to sound like zero hedge. Why is the FT sounding like zero hedge? The FT is but it's not just them. It's a bunch of these papers. It's a bunch of these, like, Goldman Sachs put out a note on diesel crack spreads. Thanks, guys, for getting to that eventually.
Thank you.
But that's the point. Look, after I started going on Nolfal's show, all these finance guys started following me, and I realized, oh, wait a minute, finally they're listening, because it's time to listen. It's time. Like, it is that moment, and it's starting to bubble up. And I think ultimately what you boil that down to, and it speaks to what you were just talking about, that there are all these tweets now investigating Bessent's personal investment or professional investment activity and so on. Wall Street's turning on the Treasury, and they're turning on the Treasury Secretary. And if I were sitting across from Scott Bessent right now, I'd say be very careful on that. Like, that is quite a mob to turn on you, and they're not very nice when they turn on you. Like, that's when, this is a much more extreme version, but when that guy's that young guy's hedge fund blew up, the AI genius or whatever, this hedge fund
situational awareness.
Situational unawareness,
Unawareness,
unawareness. You tried to raise afterwards. I made a joke about it on Twitter. It's like, oh, I think I'll raise more capital. It's like, might want to get some situational awareness there, buddy. But, like, do you remember, that's just the most recent example. You've seen this a million times. But when that happens, it's like a mob comes on you, and you, like, get your head flushed down the toilet, and you get bullied, and I think he had too little situational awareness to realize what was going on. But most of the time, it's a brutal thing. Like, if you've ever known someone who's blown up a fund and got, like, a week's bad press, like, they dig up all sorts of stuff, and they start they pin it on the fund manager, and it's a very unpleasant thing to go through, I'd imagine. I know at least one person who's gone through that, probably two people who've gone through that before, and it's very, very, it's very unpleasant. Now, those kind of hits are just put out by, the people who've lost, any major players who've lost money due to the blow up of your fund. Occasionally, probably by the government and so on as well, if it's needed some sort of a bailout, because then people are mad at you and they start leaking stuff to the press, Now imagine you're the Treasury Secretary, like, controlling every major global market. I'd just say to Scott Bessent, like, dude, like, be careful here. You could really go down in history if you're not careful. Like, watch yourself. But he's not going to watch himself. He's going to probably make some crazy comment later on today and try and take over the markets.
Because he's so interventionist, right? He's been trying to control oil, gold, treasuries, the yen. So he very much believes that he's right, and he knows what the right prices for things ought to be. Reminds me a little bit of Bernanke on that. And I just totally disagree with people who think that, right? I believe in free markets. Just let the markets sort it out. They'll overshoot, they'll undershoot, but generally be right. But when you give us ZIRP, zero interest rate policy, for 8 years, bad things happen, and now we're going to have to sort of dig out from under all that capital malinvestment.
Not as bad as what's going on now. Like, ZIRP is nothing in comparison to this. I mean,
really?
What does it really do? It pumps asset prices, right? And it blew up it reinflated the stock market, and it reinflated the mortgage market, I would argue.
But we also saw junk debt trading down with a four handle, right?
Junk debt, yeah.
So... Yeah.
It made a ton of malinvestment. There was tons of malinvestment, 100%. But, like, look, you can wash that out with a cycle, you know what I mean? And maybe you'll have a recession or whatever. What Bessent's playing with are darker forces altogether. Like, the ZIRP is like gray magic, but, like, Bessent's in the black magic, He's, like, playing with voodoo dolls and stuff like that. You better be careful.
Well, what could happen? What could go wrong?
Well, I mean, ZIRP is... I said this to you last time you were on the show. Like, you can make... I think that there are reasonable cases to be made. I'm not even commenting. I don't think there's even any point in commenting on it now, because we're at the end of an era. But you can make a reasonable case that the government or the independent central bank, or whatever you want to call it, should set interest rates. And you could even make a reasonable case that in a deflationary environment, you should try and, push the real interest rate negative. That was the idea behind ZIRP. I think you can make a reasonable case on that. I definitely don't agree with the QE. I think that was a terrible idea. I don't know about central banks. I used to think they should control interest rates. It's been such a mess now over the past few years. I'm not 100% sure anymore. Actually, if you want my preference, I think they should set them at a certain real interest rate, adjusted for inflation, and just leave them. This was an old proposal from the 1960s. So you just set it plus inflation plus one, and like let inflation set the interest rate. I think that is actually a reasonable idea. So that is my current working theory. But you can make a reasonable case that you use the interest rate, for example, for inflation management. Do I think you should? No, probably not, but only in extreme cases. But you can make a reasonable case for it. What Bessent's doing now, because that's a price on money, right? And so there's a kind of a, anyway, I won't go into all the economic theory, but it's the price on money. It's an unusual commodity. But Bessent is not doing that. He's, first of all, well, what we've been complaining about for a while, trying to set the price on a real good, which really is a supply and demand. Like, more than any other market, the energy markets are supply and demand based markets. Much more so than if you go and buy, a new table at IKEA or something. Like, that's a fixed price market, actually. It's a little bit more complicated than supply and demand. Now, there's a bunch of supply and demand graphs behind the fixed product, yeah, sure, but corporate prices are kind of complicated. Not so much with oil. It is a kind of supply and demand market. These commodities tend to be timber, all these kind of things. And so we messed around with that first. That's very kind of black magic-y to me. But then this Treasury thing. Bessent isn't trying to get down long end interest rates due to any accepted economic theory. So if the central bank was trying to get down these interest rates, and they credibly were saying, okay, let me go back. Why isn't the Federal Reserve trying to get down these interest rates? Because they expect higher inflation in the future. They see their job as inflation control, and so they won't bring them down. And seemingly from Bessent's interventions, the Fed are being pretty, they're holding their ground on that, like, clearly, otherwise you wouldn't be doing this. So the Fed is operating in line with something you can at least explain. Like, we believe inflation's going to be higher, therefore we're not going to let the rates come, or we're not going to put pressure on the rates to come down. We think that the markets are setting the long end of the rate, the long end, correctly or basically correctly. Actually, they're way too low in my opinion, but they're setting it basically correctly because there's inflation coming in the future. You go to Bessent and say, why are you lowering the real rate, the long end rate? Because we have to. We're going to go broke. It's like, that's not a reason. That's not like a coherent reason. Now you're just engaged in financial repression of the most vulgar sort. And you're doing so at a time when you're about to see a massive outbreak of inflation that's been caused by the war, which, as far as I understand, he didn't support in the cabinet meetings, so give him some leeway on that. But also, it's going to be worsened by your manipulations in the oil market, because you're just front-loading consumption, and that means you get less down. So instead of letting us transition to a higher price environment in line with supply and demand, you've decided to front-load all the consumption and allow us to consume as if nothing's going on, and then we're going to get a big spike at the end of it. And that's going to drastically worsen not just the inflation, the duration of the inflation, everything. You've just completely screwed the pooch on that one. And that's why you're trying to suppress. It'll be a shock, and it'll have a dynamic effect. If you just let that inflation rise up gradually, it would have been much less painful than bringing in a big shock. That has major dynamic effects down from wage increases, other price increases, everything, and potential shortages too, which have a much more profound impact on inflation than gentle price rises. So he's done all this, and then the markets have signaled like, you're driving the US dollar system into an existential crisis, which is what has been done here. And then you say, no, I'm not going to let it go into an existential crisis. I'm going to control the Treasury rate. Well, it's not going to work because you don't control the dollar. Yeah, in theory, you can print infinite money, or you can use the $1 trillion on the balance sheet you have to try and get those 30 years down. or 10-year and 30 years down. It'll be a very interesting experiment to see how successful that is and how much money it takes. It'll be a fascinating experiment. Economists will be writing about this for years. I'm kind of interested. I'm interested in the beta, actually, to see how much it costs to bring down 100 basis points on those 10 years in a rising inflation environment. Very interesting economic experiment. Not so interesting to live through. But he may be able to get that down. He may not. But he doesn't control the dollar. And he's eventually going to realize that the dollar is the main thing here. Everything's all short term. And that's why I think, did you see Trump's weird comments on the interest rates? I think it was yesterday. He made some bizarre, incoherent nonsense comment on the interest rate.
Oh, yeah. What was it?
He basically said, like, in a good economy, why don't we have low rates? It makes no sense. And in a bad economy, you should have high rates. Because he just associates, like, good, bad. It's like a Trump logic square or something like that.
Yeah, it was
cross.
Related somehow to the comment, I don't worry about our Treasury market because we have a strong military. Like, you know, we can just bully people into buying our paper.
I think he's kind of getting drip. Like on that one, he's probably heard that the reserve currency status has something to do with global power. And then so he's like, oh, so you can bomb the bond market. Oh, that's interesting. So it's retarded. But yeah, it's still like, it's weird. But yeah, he thinks like good, bad, you know. So, but I think those comments, I think they say so much because those meetings must look something like going in, the bunch of the Treasury guys trying to explain stuff to Trump like building this bizarre like cockamamie theory in his own head about it. And then he turns around and he goes, the New York Times is saying that the rates are too high. How do you get them down? And they just have to bring him a solution. Like every single time they have to bring him a solution. And they bring him the solution, no matter how bad it is. And so this is where I'll be slightly defensive of Bessent. There's a clip circulating where Bessent is saying in 2023, after the seizure of the Russian reserves, he's making the argument that you and I agree with, which is that's probably the beginning of the end of dollar hegemony. And he even says, I think the precious metals are going to do quite well in this environment. That was a pretty heterodox opinion to have in 2023. Now, if he had that opinion, he probably doesn't have too far from the opinions that we're expressing here today. That's what I figure. So I just don't think he's in control of anything. I think his job is to go in and offer a solution to whatever's in the headlines that day, to the boss.
So, but that means... It's classic Trump, right? Go attack the symptom, right? So I bet nobody at those cabinet meetings shows up with an actual, hey, you want long rates to come down? Stop deficit spending, okay? How about end the war? How about no $1.5 trillion for the defense? Like, it's deficits as far as the eye can see on one hand, plus inflation kicked off for reasons, but principally the war. Nobody's coming. Like if Scott really wants to control long rates, we would have to make some painful decisions. He's not talking about that. He's talking about what I call painless decisions.
If he went in and said something about the military budget, Hegseth would be, annoyed by that. In a normal administration, the team and the president together would figure out which is the more important priority. I don't think that's how the Trump administration works. I think Hegseth would go like, well, I need my military budget to, kick the ass of the Ayatollah. And Trump goes, yeah, we need to kick his ass. Scott, how are you going to kick his ass? And then suddenly Bessent has to come up with, I don't know, a sanctions package. Because now it's about kicking the ass of the Ayatollah. It's just, I just see all this and I'm like, oh, this is like a really poorly functioning company. I've seen one of these before.
I've seen this before. And by the way, I could find it here, but Arakchi just said, we've been sanctioned forever. Like, what are you going to do? Like, so they're not worried about that. But very quickly, so this is Gordon Johnson putting out on Twitter just a little background about Bessent. So I just want to know the man who's got both hands on the wheel of our destiny here with his black magic. He writes here, quote, consider the record. In 2000, Scott Bessent left Soros to run $1 billion of his own. 5 years later, the fund no longer existed. So in 2015, he tried again with Key Square, co-founded with Soros alum Michael Germino, and seeded with $2 billion of Soros's money, which is a bit like failing your driving test and being handed a Ferrari. Assets peaked at $5.1 billion in 2017 and finished in 2023 at 577 million. Institutional investors reportedly went from 180 to 20, a retention rate that would embarrass a gym in February. Nice. And in 2018, Soros, the man who staked him, took his chips off the table. So when your own anchor investor would rather not watch, that's not typically a buy signal. And here's his fund's performance after he rebooted. So the reboot didn't work. So a macro fund, he's trying to run the macro economy now. This is the guy, he's engaging in black magic, and you say, well, this might be it.
I think this is the end, yeah. I think if they go in and they... Look, what are the options? The whole thing's going to burn out with this war anyway, right? I mean, I think you and I agree. That's what we talked about last time I was on. Like, this is probably the beginning of the end of the global system as we know, the global financial system. But it probably would have taken a little while, you know, probably would have taken till the end of the Trump administration or something, 2028, 2030, something like that. If Bessent goes in and literally scares people out of treasuries and out of the US dollar, could be much quicker, you know, and that's the functional effect that he's having. I mean, that, like, who wants to hold treasuries? Like, you don't know where they're going to go. Like, imagine if they pile in and bought, I don't know, 250 billion in a week. Let's say they said, we're going to do 250 billion in a week. Imagine you're an investor in treasuries. You're like, well, that's immediately going to bring down interest rates quite dramatically. And then I've absolutely no idea what's going to happen. Is that enough? Like, that's what I was saying earlier. Like, this is going to be a fantastic experiment for economists. Yeah, well, that also means we have no idea what it's going to look like. Like, we have no precedent. So even just the levels of uncertainty that you introduce there means that I don't want to be in treasuries, like, at all. I really don't. Like, and definitely remember, the longer the date on the treasury, the more duration, and on the really long ones they have convexity too. And what that means is, for people who don't know bond markets that well, smaller moves in the interest rate impact the price. So when you go longer at the curve, it's like going with a more leveraged investment, if you think of it that way. And so actually, in an environment like that, if I have to hold bonds and there's a very high level of uncertainty, I'm rushing toward the short end of the curve, because there's much less duration there. There's much less leverage, you can think of it as. So I'm rushing into the short end of the curve. But of course, so actually, I just thought of this now. If the Treasury starts selling short bonds to investors that don't want to be in the long bonds, and then recycle the money into the long bonds, what type of a market is that? Like, everyone's trying to rush into effective cash. Oh my God, the more I think about this, the weirder it is, actually. But anyway, the TLDR version on that is, you just aren't going to want to be in this market. And if you're not in this market, you're not going to want to be in the dollar. So, yeah, I mean, I saw, which big fund was it? Like, today just announced they doubled their golds. They had a cap, a ceiling on the amount of gold they're allowed to hold, and they doubled it. I can't remember which it was, but it was a really mainstream fund, which, like, usually wouldn't do fun stuff. And, yeah, I mean, that's what I'd be doing. Well, that's what I may be doing. But I don't hold any treasuries. But if I did hold any treasuries, I'd be swapping them into probably precious metals and commodities, right? And maybe some cheap equities if I could find any.
Yeah. It was who just came out? I think it was Dalio. Just said, hey, you should probably be holding 15% of your portfolio in gold. And of course, I think the last time I looked at the overall asset allocation, it was about 1.5% to 2% in U.S. is sort of allocated thusly. So we're talking about a major, like, even to get to 15% is, I couldn't even make the numbers work getting to 5%, right? Because that would be like $18 trillion coming out of standard treasuries and other financial assets and pouring into gold in a market that's about 1.4 trillion. It's not a lot. So.
No, but the gold market can, in theory, absorb infinite capital. The price just goes up.
No, I mean, just, at prices that make any relevant sense to me at this stage, right? Yeah, you quadruple the price and it all begins to pencil out.
Really hot. What about 30,000 an ounce?
Could be. Somebody took out 38,000 contracts.
We're talking about the collapse of a long-standing financial system. Like, crazy things could happen. I mean, why not?
Do you think Iran knows this?
Gold go? Well, I mean, you're so put Iran to aside for a minute. You're the one that floated the theory that the Chinese, as part of the MOU negotiation, may have been asking them to put the squeeze on the gold price temporarily so that they could buy more. And I sent you it just before the show. Or no, you interacted with it on my X feed. The gold interest, the open interest on the Shanghai exchange has just exploded again. Well, looks, that's as much evidence as you're going to get unless we see the underlying documents of the deal, which we may never see. So I think that's pretty good evidence that happened. So, China's still loading up on gold. So yeah, I mean, maybe gold just explodes. Or maybe China open the yen or the yuan market like much quicker than we think they're going to do it. Those interest rates are low and stable in those renminbi bonds.
Yeah, the Chinese bonds have been going the right direction as far as Scott's concerned. Their 10 years yielding what, half the U.S. 10 years right now? Something. Last I saw, I think it was under 2.
Yeah, it's under 2. It's 1.9 or 1.8 or something like that. Yeah.
That's crazy. So I don't know what that means yet. All right, but so listen, we don't know what this economic D-Day is going to be, but we do know that China came out a couple days ago and said, we're not playing ball with this. You do what you want, but we're not going to abide by your sanctions. That if China, obviously those sanctions are mainly targeted at China, you would think they would be the major interactor economically with Iran.
Russia are already fully sanctioned, so you can't target any sanctions on Russian companies. They're all sanctioned. So the two main trade partners with Iran are China and Russia, right? So it has to be China.
And they've already said, well, we're not playing. They've said that before. I think there was actually a state directive at one point that it told specific companies don't abide by these sanctions. So they already thumbed their nose at us once, and I don't think anything really came of that. They just ignored the sanctions, and we didn't do anything. So I think it's probably toothless at this point. We can't sanction China because we need the stuff they sell us more than they need our dollars. Obviously, we get real stuff in exchange for dollars. We don't have an option at this point.
I agree. I mean, there is a chance, even if Bessent comes out with the most aggressive statement, like anyone who sells anything to Iran gets put on the sanctions list, which happens to be like large amounts of the Chinese economy, their laptops, everything. Like the Iranians are going to be buying laptops, they're going to be buying smartphones, they're going to be buying, like, the Iranians don't live in like absolute poverty, okay? Like anyone who thinks that's like stupid, right? The sanctions have done a lot of damage to the country, but like people have, it's in the 21st century, okay? So we're talking about like laptops, phones, like all the stuff we kind of need, right? And then there's the other rare earths and everything. So I'm sure if you enforce secondary sanctions, it will be completely catastrophic. But I don't know. I wouldn't put anything past them, They're desperate. They're really desperate. And what if they did it? And then the Chinese turned around and either the rare earth metals were on the sanctions list because maybe they sell rare earths well, of course they would. They'd sell rare earths and magnets and stuff because you'd need them for missiles and everything in Iran. So of course they would if you think about it. And then, maybe the secondary sanction, maybe they don't even have to choke off rare earth metals. They just end up on the sanctions list. So they don't even have to do export controls. OFAC does the job for them. I mean, at that point, the American economy will just melt down because the AI bubble will pop. Remember how badly the AI sector responded to the last... They didn't even choke them off. They put them on a list. That was the initial threat that I remember. They assigned various rare earth metals and stuff to a list, and then importers had to get a license. And that freaked out. The markets didn't understand what the signaling was, and so the AI stocks went down quite aggressively. I think that was last year. It was in the trade war. And then the Trump administration just kind of stopped talking about it. And I think you're right. I think we just kind of like fizzled away or whatever. So that might happen again, but they're desperate. Some of the interventions we're seeing now are so crazy. So crazy. Like Scott Bessent selling euro to buy Japanese yen. And then Did you see how the Europeans responded?
They weren't that happy with it. They thought maybe they deserved a phone call or something.
No, but they put out, the ECB put out a report saying that they thought the AI sector was in a bubble in the US.
Oh, I didn't see that. Oh, Getting catty. Mm-hmm.
Well, that means something, because if you're a fund in Europe and you're allocating capital, if you're allocated to the AI sector and it blows up, okay, fair enough. Everyone was in on it. If the same thing happens and people can point to an ECB report a month before it blew up, it's pretty uncomfortable for you as a portfolio manager. So,
Interesting. Yeah.
any more of that, and they could convince a capital flight in Europe. I mean, Europe is a major holder of US debt and equity, like foreign holder. We always think of Japan and the UK and all that. I think it's because we don't categorize the EU as a single country, which is probably the correct thinking. But I think if you put EU as a single country, they'd probably be holding maybe, I think, more than UK, right? I think they might be the biggest holder if you aggregate them. I mean, the EU trade surplus with the United States has been very large for very long.
Well, the S&P is like something like 75% of the world's capitalization in stocks. I mean, it really, all the PE expansion and all of the explosive growth and the whole thing required a lot of foreign capital flow to sustain. So,
and a lot of it's coming from Europe. I've always thought with the Trump administration's bullying of Europe, I've always been, and I've said it to a few people in DC, like, I get it. I actually am as opposed to it as the average European. The Europeans are so badly behaved, but they sometimes need a slap in the face. But sometimes it gets excessive, like the dumping of the euro. Like, that's just egregious. That's a really stupid, self-destructive thing to do. It's not good for anyone. But I always said to the Americans, like, you're right, Europe is completely screwed militarily. You're right that their economy has awful structural problems due to the energy crisis. But what you miss is that Europe is your creditor. Be careful with that. And I think what's just happened in Canada in a different way has been another one of these mistakes, that you saw that the Canadians are shutting down 300,000 barrels a day.
For maintenance.
Maintenance, right? But it's just,
it's like the ECB report. Like,
it's like the ECB
cause
report.
effect.
Like, and then you're like, ooh. So they're like, Canada can't do anything. It has no military. Correct. Its economy is minuscule in comparison to ours. Correct. But it supplies a lot of your energy. And the NAFTA arrangement, whether you like it or not, I'm not a huge fan personally, but whether you like it or not, it's created an integrated refining system in North America, that's very complex and requires all these different types of oil. And Canada has this exotic basket of oil products and everything. It just seems like and I was saying this to Mario yesterday, like, sometimes you can kind of try and rationalize everything that's happened, like we're on the downside of the roller coaster. The people in charge aren't particularly competent, and Trump has a very whatever is going on there. And so, like, yeah, it's definitely like you've put a rocket booster on the downside of the roller coaster. But why, like, who thinks it's a good idea to pick a fight with China over the tariffs at this moment? Like, why? Like, why wouldn't you just say, okay, we don't like Canada, we get it, but, like, let's just do it in, like, 6 months. We have an energy crisis looming. It's terrible. Canada's integral to our energy. They've already signaled that they're going to almost, like, join the axis of resistance. I joked about it on Twitter today. Like, Canada is now in the axis of resistance in terms of the economic war. Like, but they already kind of signaled that, guys. And so, yeah, what if they just start, like, doing maintenance on some of their refineries? Canada don't need that energy. They have tons. And of course they can prioritize the shipments to their own country and everything like that. So, but why pick the fight? Why not pick it in 6 months? Or, like, wait? That's what interests me. That the decision making is so strange.
Today's markets are more volatile than ever. With ongoing economic and geopolitical uncertainty, navigating such environments requires thoughtful, adaptive strategies, not a one-size-fits-all approach. At Peak Financial Investing, our registered investment advisory firm connects clients with experienced wealth managers who focus on active portfolio management. These professionals use evidence-based strategies designed to respond to changing conditions, not outdated formulas, but customized approaches grounded in research, discipline, and risk awareness. We believe in open, informed conversations, including discussing tools like precious metals and diversification as part of a broader financial strategy. Every investor situation is unique, and our advisors tailor their guidance accordingly. Visit peakfinancialinvesting.com today to schedule your free consultation and explore how proactive management can support your financial goals. I'm Dr. Chris Martenson, proud to work with Peak Financial Investing, and my support reflects my professional views. I encourage you to take control of your financial future by making informed decisions. If you add it up, you can organize the dots. And again, I'm a human, so I look in the night sky and we see whales and dragons and stuff, right? So this might be over dot connecting, but it's coincidence of the highest order that, both the Iran war starts and then, Ukraine really gets targeting instructions for all of Russia's refining, right? And then it's not just the oil. We talk about the oil all the time, but it's the fertilizer. So now we have this major fertilizer thing. 2027 could be pretty spicy. And on top of that, to your point, we also have this thing called a super El Nino that seems to be developing, which could do things like shut down the monsoons and create issues, for India and Pakistan, et cetera. So you would think be a great time to go, you know what? Why don't we just, as this El Nino sorts itself out, why don't we just back off on the fertilizer story? Why don't we just do what we have to do for humanity's sake? We can pick it up again next year, if we really feel it's that important. The way I arrange these dots, I'm like, well, that's a lot of coincidences. Kind of looks like somebody wants the worst possible outcome for the U.S. rather than is legitimately floundering and doesn't quite know what to do. Because if you flip a fair coin, eventually it comes up heads,
That's what I mean about the Canada thing. If you flip a fair coin, eventually it comes up heads, Just in a decision-making process, you're like, okay, let's say the decision-making process is chaotic. And you're flipping the coin, and basically the coin is Trump, and use the example I gave, Bessent says, hey, why don't we not do the trillion in military spending? And Hegseth goes, America, and then Trump goes, America. But imagine then the Canada people come in and they're like, yeah, we really need to stick it to Mark Carney. And maybe the Treasury guys go, guys, energy crisis, come on. And then Trump goes, yeah, energy crisis, come on. What? But no, it's everyone is the worst possible decision. It's so weird.
Mm-hmm.
It's so weird. Yeah. It's scary. It's eerie.
It's weird. And so one of the more important things, of course, to Bessent's earlier comments about the dollar and its reserve status and petrodollar and all that is that, so here's the intervention. Here's right down here, right below me. We can see this most recent one where, Bessent waded in and the Bank of Japan waded in and all that. But it's already bleeding away. And that's how these interventions have gone. Stick pops up, bleeds off, pops up, bleeds off, pops, bleeds. So we're in another pop and bleed. I don't see anything different. But my comment here, Philip, is the U.S. Treasury is not respected by the markets anymore. That's kind of that's a big moment.
Yeah, it's a huge moment. I've never seen this before. Any other and it's a little bit like the Iran war. Could they have sold the markets on this? Probably not at the end of the day, but maybe for a little longer. It's kind of like the Iran war. There was no prep for it. There was huge prep to do quantitative easing and stuff. The initial bailouts were a big shock, and they generated huge pushback. Occupy Wall Street, everything like that. Lots of news headlines, everyone was like, why are you bailing out these bankers? What? I'm losing my job. What are you doing? And then the state got ultra paranoid about that, and a lot of things happened after the bailout of the banks, actually. Nobody talks about in the financial sector and politics, especially in left-wing politics. A lot of things happened after the bailout of those banks. And the financial media was never the financial media that it was pre-2008. The quality that was lost was spectacular, actually. But at least there was a chance. And it was the same with, when you compare the Iran war with the preparation for the Iraq war. There was they built consensus on it. They gave everyone a coherent narrative and everything like that. And there's been no consensus built for the kind of reactive crisis measures that are being taken now. They haven't even tried. They're not even explaining what they're doing. Bessent's never come out and said we're in a crisis. That's really notable. The America is clearly in some sort of a dollar or fiscal crisis right now. By any fair standard of measurement. And because there's a global dollar system with the Japanese holding loads of those bonds and so on, it's a global crisis is brewing. It's not even brewing, it's here. Like, it is here. And Bessent's coming out and saying sunshine lollipops. I mean, the closest he said was that bizarre presser he gave on, I think, Saturday, where he said, everything's fine, oil prices are up and I don't understand why. You're like, sorry, what? You don't understand why? Oh, the algos aren't working anymore, are they not? Okay. Like,
yeah.
But what else do you mean? What else do you mean by that? Anyway, but what's the other interpretation, you know? So what he really means in that, that's just Bessent nervously saying we've lost control of the situation. And like, you'd be much better, in my opinion, coming out and trying to communicate that there's some sort of a fiscal crisis, rather than this, like everyone knows weird things are happening and you're giving these vague answers like, I don't know what happened with the oil price today. That's kind of weird. And yeah, what it cashes out of is you're just worsening. You're probably worsening the situation because people are just losing trust in it. Completely losing trust in it. I mean, why would you trust this? I wouldn't.
Well, we saw the same revolt against the Treasury, last week with the expansion of the buyback program from $2 to $4 billion. Gave a little pop. I think the 10-year went all the way down into the high 4.5s for a second or two, right back to 4.7. The 30-year dipped down a little bit. It was at, 5.32-ish, and dipped down. I think it's at 5.24 today. So it dipped a bit, but again, you get the pop, and it's wearing off in days or hours.
In one
very
market,
quickly.
The pop sticks, though. In one market, equities.
Yeah.
Equities love Bessent chaos. I don't know. It's weird, man. So if you're trying to prop up the S&P, but like your time horizon is days, not even months, like days,
Yep.
then it works, I guess. I mean, the equity guys seem willing to trade these headlines. I don't think, right, the S&P's not down this week, is it? It's still floating. So they get the pop and it keeps the ball in the air.
Super well liquefied at all times. And so I struggle with where all this liquidity comes from at all times. It's obviously fairly opaque. I don't think I've gotten your reaction to this. So this is a minute and 15 long. And this is Elon Musk. He's on with Ted Cruz. I'm sure you've seen it. I've asked a lot of people about this. I can't wait to ask you about this, because remember, the setup for this is Elon Musk, founded PayPal or was instrumental in it. So I think he understands payment systems. And this is him during late Doge, right before they pulled the ripcord, and Trump said, I've always hated this guy, and threw him under the wheels of the bus. And this came out, and I thought this was the most explosive 1 minute I've ever heard in my life.
About
it's crazy.
Is what you call
insane.
Magic money computers at the Treasuries. So tell us about it, because I never heard of that until you brought that up.
Okay, so you may think that that the government computers all talk to each other, they synchronize, they add up what funds are going somewhere, and it's it's coherent. There's and that the numbers, for example, that you're presented as a senator, are actually the real numbers.
One would think.
One would think. They're not.
Yeah.
Okay. I mean, they're not totally wrong, but they're probably off by 5% or 10% in some cases. So I call a magic money computer any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. Some are, but there's some at HHS, some there's one or two at State, there's some at DOD. I think we found now 14 magic money computers.
14, okay.
They just send money out of nothing.
So I thought only the Federal Reserve had magic money machines.
No,
right?
No. Again, the MMT people haven't got a fair shake from the skeptical people. They found some really interesting stuff when they fished around the plumbing, and they interviewed ex-Treasury people and stuff. I know a bunch of the MMT guys. I'm actually quite good friends with the founder of it, Randy Ray. The Treasury have overdraft accounts. This is what people don't understand. I don't know if they're legal. There was a big debate in MMT circles back in the day whether they were legal or not. but it doesn't matter because they exist. So the way that we're gonna do not magic monetary computers, modern monetary theory 101, and this is great. So just to clarify, modern monetary theory comes out of a very old theory about money creation, which goes right back to the 19th century. It's called endogenous money creation. And I won't go into the entire economic history, history of the theory. It is actually the mainstream theory now in mainstream economics, endogenous money theory, although the textbooks don't teach it properly. But endogenous money theory basically says that that money is created from the economic activity itself, and the banks just kind of get behind it in a sense. And the basic thrust of the theory is no matter what type of institutional setup you have, the institutions will always bend to facilitate the money. Now, for what it's worth, I believe this is correct. I don't believe in the quantitative theory of money where the central bank controls the money supply. I think the endogenous theory is true. MMT makes other claims too, but when MMT got going and it got this kind of activist base, there was an awful lot of fishing around what the institutional constraints on Treasury were. And one of the interesting things that they came up with were that there were these overdraft accounts at Treasury. So the way it's supposed to work from an endogenous money point of view is that the Treasury has to issue debt anytime it spends, right? So it has to, okay, they have this big fund or whatever that Bessent is talking about, but that's separate. If they want to spend 20 billion on some armaments package or something like that, they float the bond, whatever bonds their financial management office works on. And my ex-colleague used to actually float those bonds. He was the guy doing it. You float the bond, cash comes into the account from the bond sales you were looking at earlier, and then you transfer that cash to the provider, to the defense company, Raytheon or whatever, and then they hopefully deliver products. I'm not sure if they do or not. That's a big debate. But you hope that they deliver some sort of functional product. I see their Patriot Pack missiles have come down in price by 50% just because somebody told them to. Kind of interesting procurement system you got going there. Yeah, it's kind of weird. That was just out today. Anyway, no, don't look into it. But so basically, that's how it's supposed to work. You float the bond, you get the money in the account, and you pay. But and then the endogenous money theory is that if too many bonds are put into the system, the interest rate will go up, right, in line with supply and demand. There'll be too many bonds, so they'll fall in price, and the interest rate will go up. The endogenous money theory, which the MMT created here to, basically say yes, but because the interest rates are being set by the central bank, if the interest rate starts rising too much, the central bank will automatically engage in open market operations to soak up those bonds and drive the interest rate back down. And what that does, it creates an ecosystem where the Treasury is basically allowed to spend as much as it wants. You don't even have to intervene in the market in a normally functioning, when it's not in the crisis situation it's in now. You issue the bond. If it drives up the interest rate, then the open market operation comes in to stabilize the interest rate. This is all true. I honestly think it's a really good description. But the interesting thing was that they found, a bunch of people who were investigating it found that they had these overdraft accounts in at least in the Treasury. If Musk says that they're in other departments too, I believe him. He must have seen them. But there was definitely overdraft accounts in the Treasury, and basically, my understanding is the reason for this was because when they investigated it, the people at the Treasury had a crude understanding of the endogenous money theory just from working in it. They had this crude understanding that yeah, you can issue as much as you want. This is where Cheney got his deficits don't matter stuff. It's from the career people at the Treasury. That's where they're getting. So the career people at the Treasury basically know how this system works at a very crude level. They couldn't explain it to you or anything like that, and so they've just given themselves overdraft accounts. That's my understanding. And the overdraft accounts, as Musk said, it's an overdraft. So an overdraft works. There's no money in your account. You're at zero. But you've applied for an overdraft account. They've applied with the overdraft account with the Federal Reserve, presumably. And I guess the arrangement is something like, well, you're going to be backroom funding it anyway, and we'll clear the balance at the end of whenever and issue the debt. But, we have to pay this thing. Just give us an overdraft into the account. So, yeah, I think that's what it is. Yeah, I heard about these back in, it must have been 2011 or 2012 or something like that.
But you think it still clears, huh? Somehow it must, or our banking system has a hole in the hull, and then it doesn't work. Obviously,
it must be the Fed that's giving the overdraft. And of course, if it's an overdraft by the Fed, it's just money creation. I mean, the Fed don't take that money from some savings account at the Fed. No, they just create. It's like a QE program. They just create the money.
Where would that
It's
show
like
up on their
open market
balance
operation.
sheet? Is that
They create assets. They create liabilities. Excuse me.
So they must carry that on the balance sheet as other on the other line, which is several $100 billion. It's huge.
Yeah,
I don't know what other means, but
it will be in the other line. Yeah, exactly. And as you say, it's several hundred billion dollars. Yes.
Of other.
It's a funny system.
I wondered if it was related. I was talking with somebody who was actively serving in the intelligence community, because I have this burning question, which is like, look, we had these Panama Papers, the Paradise Papers, the Pandora Papers, all these releases that showed that there were like hundreds of thousands of shell accounts in the Caymans offshore. You know, that was the white shoe law firm that got hacked out of Panama. And I said, I didn't recognize, like, I thought I could troll through and I would recognize names I'd never heard of. I said, any chance that's connected to these magic money machines? Is there just like how much? What I was trying to ask and answer is how much snow is in the cornice out there. So if people lose faith in the dollar, how many are actually parked in these, 270,000 offshore accounts that got identified? You talk to white shoe asset protection people and you say, what's the minimum number to make that worth it? It's like, it's at least 10 million, but usually those accounts are 20 plus, right? So you add that up, there's $10 trillion parked out there to 20 in offshore accounts, probably denominated in dollars. Where did those dollars come from?
In dollars. Well, maybe not. I mean, if you know the mindset of the type of people who'd have those sort of accounts, they'd probably have a diversified basket, right? They'd probably have some Swiss franc. They'd probably have some euros. They probably wouldn't have any Chinese yuan unless they're involved in that side of the world. If they're really exotic, they might have some of the Scandinavian hard currencies. So maybe they're not all dollars.
But probably substantially.
Yeah, they might be 50%. They might be 50% dollars. I mean, those will be the first. Those will be the first guys that'll start buying gold. Like, I mean, you bet your bottom.
There it is.
They're going to be the first ones that jump the ship.
Yes, and I was told in no uncertain terms, no comment, don't even look there. That's like the blackest of the black boxes. Do not ask, right? It's like, okay.
It probably is.
But I'm still curious. I don't care about, what I care about is if or when the tide turns, and you say, this is it, right? When the tide turns, people, I was talking with some of the dollar milkshake people and on conference stage last week, and their view is, look, it's not that it's an imperfect system, but the dollar is the only system out there that, it's not going anywhere. And my position is people always have options, but when the worm turns, I think it turns quicker than they're suggesting it might, because when reserve currencies give it up, it's fast.
Do you have to own dollars as
no,
an American
I do not.
citizen? No, you don't. What's the mystery here? I had a debate with George Gavin, and he was saying, like, he's down in Latin America and everyone wants dollars and stuff like that. And I was like, I travel around Central and Eastern Europe and the Balkans and everyone wants euros. Like, the real thing propping up the dollar system isn't like demand for the dollar in the tangible sense. It's demand for the dollar in the sense of that large, mainly state actors and also large corporates are willing to hold very large amounts of dollars and dollar assets in exchange for goods and services. That's at the heart of the system. But we have free capital movement. You can get access to anything. You can have access to gold. You can buy euro in your portfolio. Renminbi's a little harder, but if you really want it, you can get your hands on it. You can technically get rubles. Like, the investment banks have access to rubles. I know that for a fact, even though they're not supposed to. So, like, you can have whatever, and you can have, anyone can build. I'm not even suggesting you do this. There are better things to do with your time and money. But anyone, if you just wanted to say, I want a purely neutral cash portfolio, you could literally go out and create a purely neutral cash portfolio and just have like X percent euros, X percent Swiss franc, X percent euro, X percent whatever, like dollars, Canadian, Australian dollars, even New Zealand. You could build this optimal currency portfolio, and if you had that, currency moves would have zero impact on your portfolio by definition, because everything would move against each other. Anyone listening is free to do that. Maybe you can't get access to rubles in that portfolio, little hard to get. Maybe you can't get access to renminbi. I think you probably could if you tried, but in the offshore market or something like that. But maybe you don't have the level of sophistication to do that. But it will be 80% a balanced currency portfolio. So when people talk in this kind of tangible sense of like people need dollars or whatever, I'm like, what are you talking about? You need dollars as a US citizen to pay your taxes, and you have to make most payments in dollars domestically. Does not mean you have to hold any assets in dollars. Like, no one is forcing you to do that. If there's extreme capital controls, they could force you to do that. Like, well, China don't even have that extreme capital controls, but back in the day, they used to have extreme capital controls. Those currently aren't in place. They could be put in place, true, but make the argument then, not now. There's free capital flows now.
As you tweeted out earlier today, gold is back above its 200-day moving average, and the precious metal bros are so back. I'm one of them, but that we had that long consolidation there, starting mysteriously right around the time of the war. And I heard various explanations. Oh, that's because Turkey had to sell its gold, which it did, a chunk of it. And then, maybe the Gulf states. So anyway, the story was there was selling pressure. That selling pressure seems to be over. We're back to buying pressure. And Make Gold Great put it great. Gold announces new chief marketing officer, and they put a picture of Scott Bessent.
Wouldn't it be amazing if after Scott leaves Treasury, he starts a big gold fund?
Oh man. But gold seems to be obviously where I want to go with this is I was really intrigued where you're thinking that, maybe the Treasury's already gone to the Fed. So the Treasury has a fiscal problem. They don't want to rein that in. They want two things they can't have at the same time: low rates and infinite spending. And so that's a fiscal story. And then you have the monetary side where the Fed has to worry about this inflation now, because the Fed lives and breathes and exists because of they have one product. They are a one product company. They have a dollar. That's the whole thing. So if that really starts to get debased in a big way, they have a huge problem that's kind of existential for their entire reason for being. In my whole adult life, I haven't seen as much daylight as I think I'm detecting between fiscal and monetary currently. Mm-hmm. And I love a good catfight. So I'm kind of hopeful there is some daylight. Would you agree that there's some there?
I'd put it in an even more boring institutional way. The Federal Reserve, I can't remember the name of the law that gave them their mandate. It was in the 70s, and it gave them a mandate of low unemployment and low inflation. So they have to maximize for the two or whatever. Can't remember the name of the law. Actually, one of my friends helped draft it. That's a weird story. But it was J.K. Galbraith's son, Jamie Galbraith, was instrumental in drafting that law in the 70s. But so basically that's their law, and it's not so much that the average Federal Reserve Board member cares so much about the dollar, although they're pretty diligent technocrat economist types who take that stuff way more seriously than a political appointee at Treasury or anything like that. But no, the real issue is if they got on board the Trump train here, as it reaches its final destination, they'd be hauled in front of Congress and the Senate, and they'd say, you violated your mandate. The Democrats would definitely do this when they take the House or the Senate. I don't know what they're going to get. I haven't looked at the polls, but they're going to take one of them. I can't remember. I think it's the House and then the Senate's up for grabs. Is that correct? I can't remember. I think that's it. And then, but whatever they get, if you're on the FOMC board, especially if you're someone like Kevin Warsh and you're associated with being a MAGA guy or whatever, you better watch your back, because if they haul you up over the coals and say, you haven't been following the Fed mandate, that's what you're there to do, but you've actually been engaged in some sort of financial repression or monetary financing of government, they could get in a lot of trouble. I don't know what the punishment is for not following them, but at very least, I'd say you're never working in this town again, and you're lucky if you're going to get a decent tenured position at a university. So what's a poor economist to do? You know, pretty limited job options there. So yeah, I mean, like, if anyone who gets pulled into that at the Fed has a short career lifeline, I would say, and so I doubt they will, or maybe like one or two of them will try, or they're trying behind the scenes. But I think the more likely outcome of that is actually that the Trump administration tries to rip up Fed independence, which is actually possible if the crisis gets worse and worse. But I would see the ending of Fed independence by executive order, which may or may not be legal, I don't know, as more likely than having a bunch of Fed people completely destroy their careers. I'd quit. I mean, if I were advising an economist on the Fed board, and they said they're making us do this monetary financing, the Democrats have had a word through back channels and said that they're going to haul us over the coals, I'd say quit and go back to your university department. Because if you go through with this, you're going to lose your job pretty soon, you're going to be humiliated in public, and they're not going to accept you back at your university department. Now, maybe you could clear out the whole place and get a bunch of yes men in. Where would you even find them now?
I'm sure they'd find them, but if they do that, then that is really the acceleration. That's that rocket motor on the downslope, right? Because to me, economics is fairly simple. We have debt-based money, which means it's faith-based, right? So you have to have faith that the government isn't going to overdo it, or faith that it will still be accepted by other people. You have to have some faith that there's that endogenous link. There has to be this. Ultimately, money is just a claim on goods and services, and debt's a claim on future money. So when you look at it that way, there has to be some relationship to actual stuff, you know, at the end of the day. Otherwise, I mean, this is just all fugazi. It's all fair. It's all just markers in a game. Well, when you look at it that way, we have 116 trillion in debt in the United States and climbing. It's growing. It has been since the 70s, since the breaking down of Bretton Woods on August 15, 1971, final breakage of that. And we've been compounding our debts at 2x the rate of even nominal GDP growth, which is just a math problem. Sooner or later, somebody runs the math and says, these numbers don't square. So that's what Ray Dalio has been saying. Even Jamie Dimon saying, I don't like long bonds here right now. But that mismatch has gotten grotesque, and we've kicked the can. And the question is, are we at the end of the road with a big pile of cans? Or is there more road here? I don't know what they do at this point, because we're seeing that the worm has turned in the Financial Times article and comments all over X at this point in time. Like, people have suddenly, the school of fish has figured out that, you know, the message is going this way, and Scott Bessent's trying to take it that way. And so they're putting out pretty nasty articles reviewing his actual performance as a grown-up. Is that what you mean, beginning of the end, that we're like out of road in this story, and so now we're going to have to violently, if not suddenly, square the books? What would that mean?
Yeah, I think so. I mean, I wouldn't be surprised if the bad newspaper stuff disappears in a few weeks. You saw that happen with oil, right? I don't know what screws they turn, but they're clearly able to turn some screws at the editorial level, and they did it with oil. So unless it's janky, or, you know, it's a faith-based thing or whatever, I don't understand how it works. I just see the outcome. They might be able to do that again and tell them to stop criticizing Bessent so much and say, you know, it's in our interest to keep the Treasury market afloat. But I don't think it's going to make any difference at this stage. Investing in Treasuries in this kind of environment is going to become, like, really difficult with the volatility and everything like that. So yeah, I think it's end of the road, and I think what it's going to look like is we're going to see the dollar debasement trade on steroids. I call it the toilet paper trade. And I think everything's going to feed into this. Like there's no brakes on this train, right? They're talking about the secondary sanctions thing, which, as we just talked about, is complete suicide if they implement it. At the very least, even if they fake it, it's bad market signaling, and it introduces another 3 months of uncertainty while the markets try and figure out what the hell's going on. That's what happens every time, and what happened with the tariff war as well. So they just keep introducing, like, scaries into the ride, right? You're like the ghost train, and like you keep getting the boo and stuff like that, and like the guy's having a heart attack, you know what I mean? It's like, guys, like, stop, no, don't put the zombie up, and like, you know, he's had another heart attack. It's like, why are you doing this? Stop. But they keep doing it, and it goes back to your point, like you flip a coin a couple of times, and like you think you'll get heads once. So yeah, I mean, look, I always thought when we last talked, I thought we were at the end of the train, but the end of the train is like 2 to 4 years out, right? It's a more long-term process. Now, of course, many people will think 2 to 4 years out is a really extreme claim, and like Jamie Dimon's riding is 25 years or whatever. I totally don't believe that. I think the long time horizon is 2 to 4 years. But I'm just worried that we'll be talking here in January and just be living in a different world. A world with energy shortages, with completely chaotic financial markets, the beginning of a food crisis, but that probably won't hit until a little bit later in 2027, although there'll be food inflation before that. I think there's already some food inflation. Trump is intervening in the burger market. We could joke about that. Like whoa,
with meat
you're
products.
Right. Meat products. Like, whoa. I mean, that's a chicken in every pot. It's Herbert Hoover's old thing, but I didn't know Herbert was offering you the chicken himself. I mean, like, so I thought it was a thing about rising living standards in America, but this is a Herbert Hoover play where Trump actually gives you the meat physically. So now I'm not sure what it's made of, so be careful eating it. But where did it come from? But mystery meat. But maybe it's pink slime or something. Anyway, but no, but yeah, I think that's where it's going. I think like we're going to wake up in 6 months or 4 months from now. We're going to be in a world of like very high energy prices, maybe shortages, the beginnings of some sort of a food price inflation crisis, and completely chaotic financial markets of the type that we've been seeing for the past 3 weeks, basically beginning with the yen intervention. And maybe they get the media under control. But what we've seen as well, like even if they get the media under control on the bomb thing, have you noticed in the past, since the yen intervention really, people aren't buying the oil thing anymore. Like Axios put out some BS on the oil thing that was like 20 million barrels, like back to normal in the Strait of Hormuz.
Would you believe 40 million?
I mean, it's just like, dude, like write it a bit better. Like if you're gonna write a novel, make it believable. But people just kind of laughed at it. It's become kind of a joke. And like, you know, when things get like that, like that's what happened at the end of the Soviet Union. Everything became kind of a joke. If you read accounts of it, like people would actually, up until the very end, pretend to go along with the rituals, and they talk to people in private like, this is stupid, like we go into work and we don't do anything, and you know, we pretend that there's stuff in the shops and like there's shortages and we're at the black market, we're already doing the black market. But they kept a public appearance of the whole thing. And when the system snapped, it's when people just stopped adhering to the public adherence of the whole thing. And it feels like that. Like it's starting to feel like that. I'm shocked that we've got here. I mean, it didn't have to be like this, but the management of this whole thing has just been like, I don't even know what to say about it.
Yeah, so many interesting points to touch on there. My model for this is that there are people who live in the world of reality, and then there are people who live in the world of abstractions, right? So Ben Bernanke had a very abstract view of economies, right? But people who own a factory with dirt under the fingernails, like they have a different, more realistic, grounded sense of what it means to operate these things. All these DC clowns right now, they're all abstractionists. They live in abstract worlds where narrative actually has been the most important thing, and they believe, I think they believe in a form of manifesting, sort of a woo-woo concept, which is if we say this thing enough, it'll actually happen that way, right? Problem, you got molecules over on this side of the story, and so those molecules are missing, and they're going to spin their tails over and over again, but eventually you get, we're engaging what's called a private knowledge conversation. Even if we share it with 100,000 people, it's still private, in the sense that common knowledge is that moment when everybody knows that everybody knows the same thing, right? It's literally the tale of, the naked emperor and his clothes, and the little girl who's the child in the story, the emissary, says he has no clothes, and everybody knows that he's naked, right? So what's going to happen when these are 2 separate months? This is Diesel out of New York Harbor, so this is sort of an East Coast U.S. thing, but it's broadly representative. What fictions is the BLS going to have to spin for the July CPI print to erase that that first yellow bar?
On core CPI. Only focus on core CPI.
Super core, super duper core.
Super core, even better. Yeah, with all the important stuff removed. They should just take everything out except plasma TVs. That would be a really good idea. You know what I mean? The plasma TV price has gone down again this year.
Fantastic.
What are you complaining about, Bessent? I don't know. I don't think. Yeah, I don't know. I mean, maybe they start faking the stats. What if they start faking the stats?
More. They've already been faking the stats.
More. I mean, no, but like if you're to be generous, they've probably been massaging the stats. What if they start just faking them?
Mm-hmm. Well, I've been wondering about that. I've been openly questioning people in the biz.
Argentina did it.
But the BLS does it, can do it. The BEA does it, can do it. But would the EIA fake stats?
I don't know. I don't believe the oil futures prices.
No. Crazy.
But, I guess that's manipulated. But I don't know. Late Soviet Union, like nothing was real. We may go into hyper reality or whatever. Argentina faked the inflation stats for years, and actually, in fairness to them, they kind of had to. That's a big long story. I'm not. It's a weird thing for me to say, which I wouldn't usually say, but they had to get that peso under control, and it was their last ditch in a way. And the only way that you could see real Argentinian stats was from the ex-finance minister that was ousted by the Peronists, and his son, I think, was running them at MIT. And there was a little bit of an op going on there. I'm sure it was to put pressure on the government that the United States didn't like. It's actually pretty trivial with AI now to put together an alt CPI, because he was scraping all the prices manually with an automated bot, I'm sure, but it was a difficult programming job off all the online stores. With AI, I can do that. I can do that with limited programming skills. I can do that. So, but if they could start faking the stats, so maybe if we start seeing fake stats, a little cottage industry will grow up of people publishing their own CPI estimates from online retailers. I mean, that's kind of an advanced version of what we've had with the commentary online, like with Nofal's show and so on. I mean, I don't want to sound big-headed or whatever, but I think we've had an enormous influence in the past couple of weeks. I think people haven't. I'm just saying, from going on those shows and then seeing my followers, they're not skyrocketing, but the followers I'm getting are all these people that are finance people, and it seems to me clear that they're. It's like when a paradigm runs out, it doesn't explain anything anymore, and so you have to find a new paradigm. You just have to. And then there's one there, and it's okay, is this guy a tinfoil hat guy? Oh no, he's somebody who used to work at GMO. Okay, he kind of sounded a little crazy a year ago, but he's not sounding so crazy anymore. So the information aspect of this could be really interesting. But we might have to start creating statistics at some point. That'll be fun.
Well, the Chapwood Index, if you haven't followed it, Ed Budkowski's just been doing exactly that for 20 years. He goes into...
Using online retailers.
He's got a basket of goods, 200 goods, that he collects across, I think, 50 cities. And it's the same basket. He doesn't change the basket, doesn't reweight them, doesn't do all that crazy stuff, no substituting, any of that stuff. But he includes a few things that are not included in the CPI report. He includes property taxes and insurance and things like that, which get really buried. According to the BLS, my health insurance has gone down 35% over the last 5 years, because they use this really bizarre thing where they take the implied premium is from the, and I don't totally understand what they're up to, but it's from a certain part of the profit line from health companies, and their assumption is that the gap between what they're earning and that must be the true price of things. It's bizarre. Why not just
survey people on their healthcare premium?
Yeah, why wouldn't they just do that? Because I go to a health portal and I can see 50 plans at once. Why not just take those plans and call it a day?
Yeah, that's not a difficult. It's harder to figure out the price of milk, actually. So,
yep.
Okay, that's kind of weird.
Right, and then housing costs. is owner's
the
equivalent rent, where they
owner's
survey
equivalent
people
rent,
who own homes. They call them up and they say, how much would you rent your house? Like, these aren't even people who are in the market. You know, if you were going to rent your house for yourself,
They haven't rented a house in 20 years.
if they're the right people to ask, why wouldn't we? Why don't we just go to Zillow and just take a look at the rental side and make a guess? So it's just crazy. It's just, but anyway, but we've been living under those fictions for a super long time. And again, this is all starting to feel like it's going to break. We're seeing young people, in particular, get really disillusioned with all this gaslighting and stuff. And I just worry that this story is going to go a lot faster than people think, because it's sort of been this beach ball of truth that's been suppressed for a long time. And those things, when they erupt, it can be faster than people think, right? Gradually, than all at once.
Oh, I totally agree. And with this latest thing, like, again, I was saying 2 to 4 years. Now I'm saying, like, let's talk in January. See where we are. May you live in interesting times, Chris.
Thank you. You too.
That's the Chinese black magic, not the Bessent black magic.
Yeah, but it's where we're at right now, and I do laugh about it. You got to do the best you can, but I haven't, my own personal strategies have been very, let's call it, bottom of Maslow's hierarchy of needs: food, shelter, warmth, water, energy. So to every extent I can, I'm becoming self-sufficient in those areas. Not 100%, but just buffers. I just think buffers is the right way to think about this. I don't know what the shocks are going to be, but I have some guesses, and so buffers is just giving me some options in the future should X, Y, and Z happen. But I'm hearing this more and more and more, like, especially fairly wealthy people, and more concerningly, everybody I've talked to who's like really deep into AI, like they're actually, leveraging it hard to work at the big companies. Philip, they're buying farms and bunkers because they're like, this thing could go rogue. We don't know.
It's only the corporate midwits who think that people doing that are crazy. All the rich people are doing that.
I know.
Yeah, they've been doing it for like a while now, probably since 2008.
Yep. Interesting.
It's a bit concerning. I just say on top of that, I'm sure you're implying it anyway, but don't be 100% concentrated in dollars. Even if you're in America and that seems to be the currency that you're using. I mean, I've spent most of my life having multiple currencies because I've moved around the world and I have a bunch of bank accounts, but don't fall for the fallacy like all my costs are in X, therefore all of my liability, all my assets should be in X. If you're, of course, like you want to have, like, if your mortgage is X, Y, and Z, right? Like, you want to have it matched to your asset, the liability and the asset should be matched because you don't want to get caught out on your mortgage and et cetera, et cetera. But like, treat that with a little bit of leeway if you can, especially with savings and stuff like that.
Absolutely. Any final words on where you think this goes over the next few months, or what you're watching most closely?
I think for now, the Treasury intervention, it's something else every other week, The Iran thing is now becoming some sort of a weird forever war, although it's like a war that doesn't happen. It's very postmodern, it's very strange, but it has not lost its importance. People have taken their eye off the energy markets now because they've got fascinated with the bond markets, but people are going to have to learn to, like, multitask here, because every time, like, one crisis disappears back here, it's actually probably closer to becoming realized, and now you're focused on the Treasury market. No, sorry, you're focused on the yen, then you're focused on the Treasury. What's in next week? Tune in, same bad time, same bad channel, all right? So you're gonna have to, like, stack your crises at this point as we enter the singularity, the crisis singularity. But yeah, I think in the short term, I mean, there's a Bessent announcement in 20 minutes, so that'll be interesting. So yeah, I think a lot of the focus now is going to be on the Treasury markets and so on, but continue to keep an eye on the energy markets. Like, that's actually, it looks like it's pretty close to breaking point now, whereas the Treasury market will have to go through the same cycle we've all watched with the oil market, right? won't play out exactly the same, but it'll be like 3 months or 4 months of like discussion and a little bit of crisis and up and down until we finally get a kind of a result. And it feels like we're kind of closer to the result now in the energy market. Also watch for, obviously Japan's already started to unwind, and that's a key pillar of the dollar system. Britain is the next one to watch. That's the second largest holder of Treasury debt, and I would argue its fiscal and economic structural situation is worse than Japan. I know people will say, no, Japan's got 220% debt to GDP, Britain's just over 100. It's not that simple. We're up against too much time to explain it. I should come and talk to you about Britain sometime, because I know a lot about how that whole thing works. It's actually a lot more fragile than the Japanese situation. And whereas the Japanese situation is this slow burn yen crisis, like that just keeps building and building, my sense is that Britain, when it falls, it's just vertical, it's just gonna go. And but that would require a good 15-20 minutes to discuss the structural situation in Britain. But that is the second largest foreign holder of US Treasury bonds. So keep an eye on Britain. It's already pretty close to a fiscal crisis. It's been there for about 18 months. They've just about been keeping it down. I think they're offloading treasuries at the moment. There's going to be a lot of pressure on them not to do that. I wonder if we'll see a sterling intervention by the US Treasury. That'll be interesting, although they might be a bit allergic to doing it after the yen one. Yeah, so I think those are the next. But remember, it's a global system. It's a global dollar system, so it... if it starts to unravel, it'll be an explosion over here, an explosion over here, Treasury freaking out, another explosion over here. Like, that's what it's going to look like. And well, we've seen now an explosion in Japan, Treasury freaking out. So we're getting the cadence of the whole thing quite well, and it's as expected, to be honest. It's what I expected.
I'd love to do the UK thing longer, but just as a quick aside, because you brought it up, you know what the UK really needs? They need a war they can get involved. That takes people's eye off of all that other stuff. Oh, wouldn't you know it? Iranian hackers shut down a UK power plant. Those plucky Iranian hackers.
Oh my God, Britain and the Ukraine thing as well. Did you see the Telegraph that I used to write for was supposedly, centre-right conservative newspaper is promoting women being drafted in Ukraine. Like, I'm never writing for them again. Like, that's grim. Like, what is that?
It's that globalist thing. I don't know.
Forcibly conscript women from villages. I mean, it's bad enough with the men. Like,
super disturbing.
All right. Like, come on, and that's that's the equivalent. That's the equivalent of like, you guys, I guess, don't have an equivalent. It's maybe the Wall Street Journal or something like that. It's not the Guardian, like feminists, like, no, it's like, it's what your conservative uncle reads, and he's like, yeah, we should definitely forcibly conscript these women. It's like,
women, in alignment with my values.
Just throw them in the meat grinder. So what are you actually protecting? Oh, like Monsanto farms. God. Anyway, sorry.
Well, we're just softening the territory for the inevitable asset stripping, which
that's what it's
all our BlackRock MERS exploits think is such. It's crazy. I never thought I'd be living through times like this, and you're right, it didn't have to be this way. It just and probably shouldn't, but we're doing it.
Yeah.
Crazy.
I didn't either. It's shocking, actually. The whole thing's shocking. It's very sad, but we keep our sense of humor. In Ireland, we say, our wars are merry and our songs are sad.
That's a good saying. Everybody, we've been talking with Philip Pilkington. You can follow him at Philip Pilk, P-I-L-K, on X. And we'll have you back on, of course, because we got to talk about so much more.
We should talk about Britain in depth sometime, because it's very, very important to the American financial system as well.
Yeah, I would love to. Love to get some background on that. So, hey, thank you so much for your time today. Really appreciate it.
Thanks for having me. It's always fun. Have a good one in bad times, folks.